the CPI report showed some improvement on inflation. That's one of the Fed's mandates. For a look at where things stand on the other mandate, the labor market, LinkedIn is out with its June workforce report, and it shows hiring is down 2% from the prior month. Joining us now is Guy Berger, LinkedIn principal economist. Guy, let's talk about where the jobs are being created. It's interesting to see how it differs regionally.
Yeah, absolutely. I think what's interesting is that, for example, the West Coast areas are so dependent on tech, have been particularly hard hit. The other parts in the Southeast, Midwest, Northeast have been more resilient. And I think what's interesting more recently is we've seen hiring declines moderate and hiring levels stabilize. Is a lot of the cities where it's stabilized the most is actually the Northeast, where we're seeing some tentative signs of maybe even green shoots and hiring starting to maybe pick right back up.
Guy, what do you attribute that to? Why are we seeing strength there as opposed to other areas of the country?
I think it's a really interesting question. I think that essentially we saw a really broad-based pullback. I mean, we know that some sectors like tech and professional services saw a particularly sharp pullback in hiring late last year. But, a lot of those sectors are reverting to the mean. I think that a lot of the bad news has been baked in. A lot of employers are sort of looking at the big picture and saying, you know what? I've seen a lot of bad news about, the demand slowing, but maybe it's not slowing any further. Before I cut back on hiring, before I, for example, lay off more than my workforce, I want to take a look and see maybe we've sort of reached the low point here. And I think that's driving a stabilization, particularly in areas that aren't as exposed to the hardest hit sectors. That creates more room for stabilization, maybe upside.
So if this is the low point, I mean, does that suggest that we are headed towards what some have described as sort of that perfect scenario, which is a soft landing?
I mean, I think it's definitely possible. I think that it's certainly conceivable we get some bad news we're not anticipating, and that leads employers to become cautious again, start pulling back and cutting back on hiring. But if we don't, and if inflation keeps gradually coming down in a way that I think a lot of us have been pleasantly surprised by over the last 6 months, then it definitely creates room. The labor market's been so resilient, it buys us the time to let inflation gradually glide down. And we've been really lucky in that respect.
Guy, what are you seeing just in terms of the quit rate? Because when you take a look at the government statistics, it looks like that quit rate has steadily been falling. That quitting boom that we had seen play out during the pandemic, post-pandemic, is that over?
Yeah, so it is over in the sense that we have this once in a lifetime strength in the labor market seen both in hiring and quits, in wage growth that is way hotter than most of us have seen while we've been employed. And I think what we're back to is something that looks a lot like the late 2010s, which were a very good job market. People then were talking about things were good. We were starting to see wage growth creep back up. We're back there. And I think it is a little jarring because we're coming off of the extreme heat, but things are still pretty good. And so when you look at our data, one thing we've been following is this short tenure rate. People quitting their jobs within a year of starting that. And we've seen that come down. It's done year over year. So we are moving off of the extreme heat. But like by the standards of the last 30 years, and we've seen some bad job markets, this one is definitely toward the end of a pretty strong one, just not once in a lifetime strong.
Guy, when you look at the jobs that are being created, what does that tell you about what companies are prioritizing in a tougher economic environment?
Well, that's a great question. I think what's striking to me is that there are a lot of sectors we see that have been more resilient in terms of hiring, like education, the government, consumer services. And these sectors are seeing some of these other sectors slowing down as an opportunity to hire talent that maybe they were priced out of before in terms of, you can compete with, for example, certain kinds of machine learning engineers with those companies. And now that very expensive talent is within reach. So from those sectors perspective, this is actually a hiring opportunity, not a hiring drought.
Guys, it's still a good time to look for a job. I guess how much does the potential employee, the person who's searching for a job, how much of that upper hand do they still have, if at all?
Well, I think it depends on what your perspective is. If you're coming and looking, is this as good a time as it was in late 2021, 22? It's definitely not as good as that. That was an exceptional time where I always joke people were almost like walking out the door and 5 employers were begging them to come to work that day. And people were able to start a job and then without a second thought, quit it within a year. And we've seen that come down, but it's still, again, a perspective is in 2018, 2019, we were all in these, talking about labor market, saying this is a very good labor market. We were starting to compare it to the late 90s boom. And if we're in that state, I think by historical standards, the last, few decades, this is still, and particularly in sectors that have not been hard hit by a downturn. So outside of tech and, for example, professional services, this is still a fairly good job market.
In terms of that debate that we've been having about the office space, hybrid versus full-time, what are you hearing from companies on how much flexibility they're still willing to offer?
Well, it's interesting because the way I sort of think about remote work is, aside from trying out something totally new to the pandemic, it was this benefit that employees really like, and employers are obviously somewhat more reluctant to offer. And as we've seen some of that bargaining power shift back from the great reshuffle period of late 21, 22, when employees really had the upper hand, to now when some of that upper hand has ebbed away, is, we're still seeing a huge chunk of job applications to remote jobs, but the prevalence of those remote jobs within the overall job postings has fallen a lot. So from an employee's perspective, it is much harder to procure remote jobs. Employers definitely are having, in our data, more of an upper hand bringing people back, at the very least, to hybrid, if not to fully on-site work.
Yeah, it's been interesting to see how that conversation has evolved.
Yeah.
LinkedIn's economist, Sky Berger, good to talk to you today. Appreciate the time.
Thank you.